Hello, everybody. Just want to get started on a high note. Enjoy the music. Hope you enjoyed the music. I'm Mike Patel. Welcome to Home Savvy Central live stream, and we're going to talk about the rate drops. But we're not just going to talk about the rate drops. The question is, we are getting from buyers and also some sellers. Rates have dropped, which is a great news. But what they're asking us is, how much more are they going to drop? Well, those are your buyers, and I don't blame them. They were 7%. They came to 6.5%. They're at 6%. How much more will they drop? How will this affect the home prices? How will this affect the slowdown in homes? How will this affect home prices? So we have a lot to talk about. I'm also excited to mention to you that I have a guest today. I'm going to introduce him in just in a few seconds, and then we'll start talking about the interest rate, the impact of interest rate, the housing, where it's going, where it's headed. And if you have any question, post them below. If you are looking at this or watching this on YouTube after the recording, if you have any questions, feel free to make any comments or contact me, and we'll answer any questions you have. So let me bring my guest today, bring him on screen. And Jorge, can you hear me or can you hear us?
Yes. Hi,
Hi,
Mike.
everybody. This is Jorge Villanueva. He is right here in Buena Park. I myself, if you don't know me, I'm Mike Patel with First Team Real Estate. I am in Anaheim Hills, California, in Orange County, right where Disneyland is. So if you come to Disneyland, feel free to call or visit me. Be glad to meet with you. So we have an exciting program today. We're going to talk about rates. We're going to talk about the impact of interest rates, what to expect on interest rates, and about the housing market and direct impact on buyers and sellers. So but before we get started, Jorge, just give us a brief introduction of who you are and how you work, anything we can know so that the viewers can benefit from you if they have any questions down the road.
Yeah, well, thank you so much for having me. Pretty excited to be here. And so, just as you mentioned, my name is Jorge. I'm a lender. What do I do? I'm pretty much the bank. I'm the guy who you go talk to when you go to Chase and ask for a loan for a house. And basically, to sum it up, I can do just about any real estate loan that exists in the market, and that's basically the gist
Okay.
of it, really.
Cool. Okay. And I'm sure they're going to have a lot of questions. And I appreciate you coming on. I know you're busy. We're all busy, and taking an hour to talk to us about mortgage. And I didn't want to talk about mortgage myself. I'm no expert. I do talk about real estate and mortgage all day long, but I'm not a lender. And I don't get into the details of nitty gritty details about interest rates. So I wanted to bring you aboard. So let's talk about what's going on in the market. And I know I'm going to start with a screen share. Just give me a minute.
Hmm.
And I'm going to talk about the mortgage rates today. So I'm going to share this. And of course, the big talk is the mortgage rates. But before we get started, we want to find out what the rates are today. So can you see the screen? Yes.
Yes.
Okay. So the rates today are 6.09%. Of course, that's your basic interest rate. What you get will depend on your debt to rate income ratio, your credit scores, how much down you put down on your house if you're buying a house. But the average rate or the typical rate today from Freddie Mac, according to PMM market survey, is 6.09%. 15 years fixed is 5.15%. And if you just go back to last year, for example, going back here in October, they were at 7.76%. They dropped back in March to about 6.8%. They went back up, and now they're back to the 30-year is back to 6.09. So, Jorge, when you talk to the buyers, how significant is this for the current buyers that they're looking at or
Yeah,
thinking
great.
about buying? What have you seen out there talking to these buyers or potential buyers coming into the housing market?
Great question. So I will say that depending on what the purchase price of the house is, they won't they they're surprised that really the interest rate for most people is going to be just a pretty number. Yeah, of course, everyone wants a lower interest rate,
Right.
obviously, but after you do the math, you're going to notice that pretty much for every $10,000 that you put down in addition, uh, each time, you're going to notice $50 difference in the monthly mortgage payment. So you would have to put down a lot of money to really see the difference each time, each month, to I guess make someone happy.
Mm-hmm.
Um, so with that being said, it's really about, hey, can you afford the house? Do you Are you in the right mindset? Are you in the right life situation to afford the house? Because ultimately, the interest rates, I like to say, buy the house, rent the interest rate, because it's true. You can buy the
Right.
house, you can choose to stay in it in a year, 6 months, 2 years, whenever that may be. If the market allows, you
Mm-hmm.
lower that interest rate, and you just keep going on and on and on.
Right.
So, as a matter of fact, people in general in the US keep loans for 7 years, about, maybe less. So nobody, a majority of people do not keep 30-year loans. They always they refinance as soon as possible. So I tell them the facts. I tell them, keep that mindset. You buy the house, rent the interest rate, because you can refinance into a
Right.
lower interest rate.
Exactly. Right.
Yeah.
Yeah. For example, on in the chart that I showed you, for those people, and a lot of buyers bought at 7%, 7.5%. In fact, I sold a house 2 years ago. He was a business owner. He bought a $1.2 million house back then. It's approaching 3 years now. He ended up buying at 8% interest rate, and he was so happy to pay 8% because one, he could buy a house. It was his first house,
Wow.
and the reason he paid 8% is because of course, he is a business owner. So the
Mm,
tax documentation was not all that the lender wanted. So they charge him an extra half a point. He went along with it. But guess what? He just did last year. I don't know the details, but he refinanced around 6.4, from what I recall,
nice.
from 8%. And I was talking to him the other day, and he said once it goes below 6, and we are pretty close over there, if it hits near 5.5, he's going to refinance again.
Mm,
So he's a smart business person. I mean, he paid 8%, but he said, I want to buy a house. That house today, which he paid 1.2, I can easily sell it for 1.5 today,
mm,
because he did some work in the house. But our market in Anaheim Hills, Orange County, has gone up 5% per year in the last 2 years. It's approaching 3 years. So if you
mm,
add 10% on a 1.2, which is around 120, $130,000, plus he added some flooring and carpeting and landscaping. He spent quite a bit of money. He can easily sell for 1.5. So he's a
mm,
smart person because he knew what he was getting into. He paid 8%, knowing that that's all he's going to get. And his lender had told me, which is a friend of mine, that, hey, get it there, these things are going to drop, because the feds have been talking about dropping the rates, and finally they dropped it quite a bit after 2 years.
mm.
For him, it's a big drop. So
Yes.
he refinanced it, like I said, 6.3, 6.4, and he's waiting for another drop. you know but what I wanted to get back to you earlier is when we showed your chart, when I showed you the chart, it's showing 6.09%. If I'm a buyer, let's say I want to buy a first time home, I have $20,000 FHA loan or whatever. If the rates drop another 1/8 point, or from 6.09 it goes to 5.9, or it goes to 6.2, should I be worried about it, or should I not make any difference in the payments? What would you tell them as a lender?
I would tell them they're not gonna see a difference. It's just everything that you just said about that person earned equity over time. $300,000 about that person, that client, $300,000. So that and that's in such a short time. Everyone loves real estate because real estate appreciates.
Hmm.
It's a great investment. So when you write down the numbers, when you write down facts, if you're gonna compare the difference between such a small difference in interest rates
Mm-hmm.
into thinking of, oh, you know what, I'm going to wait until the market crashes, until interest rates drop to 2%, 1%. And you compare that with appreciation and into what you pay for rent, um, into how much you're going to have to save up, how much, what's the time that you're going to have to wait until you save that much money to get into a house. The difference, the facts, is that it's much better to get into a house now.
Mm-hmm.
And people can think that, oh, well, hey, you're a lender, you're a real estate agent. You say that because it benefits you. Yes, it does. But the fact is that the numbers don't lie. And I always educate people. I don't ever tell them what to do. I tell them, hey, this is the facts. You make the educated uh, choice based on the facts, and
Correct.
pretty much go from there.
Right. Yeah. We cannot. You said the right thing. We give them information. We give them the trend. We give them the data. Hey, this is what happened. This is what's happening. This is what might happen based on this data. And then ultimately, it's the buyer who makes a decision. And a lot of times, the buyers are also sellers. So I may have to sell my house to buy a smaller house, or to buy a bigger house, or to move near
Mm,
my kids. So a lot of the buyers are sellers. What we call bellers.
mm,
You buy and then sell, or you sell and then buy. Right. So they have to make the right decision based on their emotional things. Why do I want to move? Hey, my mom is sick. I have to move to Florida. She needs assistance. I don't want to move, but it's my mom. I got to move. So it's an emotional decision. But when it comes to paper and pencil and rates, we can tell them, hey, this is what's going to happen. I personally think, and of course, I'm throwing it out there, that there's going to be another rate drop, maybe
mhm.
0.25, maybe 0.5. And this is the federal funds rate drop, not the mortgage rate. Of
Yes.
course, it follows. So I personally think it's going to drop, but I'm not telling you to wait. As a buyer, I'm not saying, hey, wait, it's going to drop. I'm not going to say that, because you never know what's going to
Mhm.
happen. Stock market may crash. We don't know what's going to happen in the election. Who's going to win, how much impact it's going to have. Usually, statistically, there has been no impact on the election rate. It is what it is. People get over it. I know right now, when everywhere you go, Facebook, social media, TikTok, anywhere you go, everybody's talking about politics, red and blue and purple or whatever. I'm staying out of it. I'm staying comfortable. Everybody's anxious. Everybody's scared. Everybody's so toxic, including my friends and family. So I stay out of the topic. But the bottom line is, getting back to your point, is here's the data. You decide what you want to do. We'll guide you and answer questions. Um,
Totally.
right. So
Totally.
moving along, talking about all these points that we discussed, have you seen on your own, and talking to other lenders that you're in contact with and reading reports, an increase in buyer activity in the last 2-3 weeks when it dropped? Or what do you anticipate?
Yes. Yes. People who watch the news, people who are on Facebook, people will see the main headlines. Things that are a shock or bad, they sell in the news, of course. So when someone hears like, oh, rate drops, uh, it's something to sell, something to pay attention to, and of course people will pay attention to it,
Mm-hmm.
and it'll catch people's interest, it'll catch eyes, catch attention, and people will be more interested. And yes, to answer your question, there's more conversations, more people calling in, everywhere, not just for myself, but just in general, everywhere, because everyone wants to know, hey, what does that mean for me? What does that mean for the house that I'm going to buy in California, Texas, New York? Um,
Mm-hmm.
how can I get that process started? And yeah, definitely more interest since that
Right.
has been in the talks.
Okay.
Definitely.
Great. Okay. So moving along, like I said, this live stream is not only for buyers, but it's also for sellers, because sellers have to sell and they need to know how buyers are thinking. What are they going to think about? And then a lot of sellers are buyers themselves.
Mm-hmm.
So the question that we have to think about, or what I want to talk about, is one, I personally have seen a lot of buyer activity, because talking to other lenders, going to office meetings, going on Zoom meetings, talking to other buyers, other realtors. Um, we definitely have seen an increase in activity, just like we've seen a lot of increase in refinancing, right?
Mm-hmm.
So where is that going to lead the housing market to? Are we going to see let me give some stats first. First of all, if you look at a year over year, number one, we've seen an increase in the housing inventory. It's gone up almost 36%.
Hmm.
Overall, Florida is maybe 40% up, and maybe California is 10% up. But overall, there's anywhere from 30 to 40% housing inventory increase. Homes that used to sell on average in 30 days are now taking almost 55 days on average, right?
Hmm.
There's not any more multiple offers out there like they used to be. There used to be 3, 4, 5, 10 offers. Now there's maybe one or two. So the price
Yeah.
jumps are not there. So what should, if I'm a buyer or a seller, what should I be thinking about as far as what's going on? Are the prices going to hold off? Are they going to drop? And then if we add the angle of the interest rate in there, where do you see it going?
So every time that interest rates come down, people are interested. People want to buy. People are interested in buying.
Mm-hmm.
So that creates interest. It creates, call it, more demand for buying.
Right,
And whenever that happens, the prices for homes, they get inflated.
right.
Uh, bidding wars, bidding
Mm-hmm.
wars happen. So prices of houses get inflated, and then of course people will want to buy the house, and just prices will get inflated. So whenever rates come down or there's talk of it, more competition. So less flexibility for a seller to say, okay, I'll lower my price, or I'll give you credit, or I'll give you a concession. And for
Mm-hmm.
those who don't know what a credit or a concession is the seller will pay for a cost of the transaction. Maybe it's a cost of home insurance policy. Maybe it's a cost of something else in the house. So all of that to say that whenever interest rates come down, there's more intention, more interest, more demand for it, which causes the prices of houses to get inflated,
Mm-hmm.
and there's just more competition. So
Right.
it's uh, uh, bidding wars, and it's harder to get into a house when that happens. And the same is going to be for vice versa.
Right. Yeah. Yeah. There's a direct impact. Let me put up this chart here, and you were talking about the housing demand. So the mortgage rate rises when rates fall. Mortgage demand rises when rates fall. So if you look at this chart, it shows the mortgage rate and the mortgage applications index. So it shows you that the rates when it was 7.2, the mortgage application index was 6.5. It kind of,
Mm,
what's happening is over here right now, if you look at the chart on the right, way on the right, the orange graph is way at the bottom near 175, right? So it's a mortgage rate. It has dropped, but look what it did to the application. It's gone up
oh yeah.
significantly, right?
Oh yeah.
So whether these are for refinance or people getting qualified, but the applications, I guess they are what we call inversely proportional, right? If one goes up, the other one comes down, and the other one comes down, the other one goes up.
Totally.
And that's true. So, so this should help the market. What this graph tells me, if I'm a buyer or seller looking, that, hey, when the rates drop, there's more buyers out there. And as a realtor, I know that when there's more buyers out there and when there's low inventory, prices are going to stay or prices are going to go up.
Hmm.
So when
Hmm.
people ask me, hey, what do you think is going to happen? I tell them two things. Earlier, I mentioned that I feel like the rates are going to drop more. Feds are going to cut their federal rates, and hopefully the mortgage rates will follow. And if that happens, more buyers are coming in. In fact, I showed a house last week, and the agent told me, well, there's hardly any activity. And I talked to her yesterday and said we had 3 or 4 showings in the weekend,
Wow.
and she didn't have a lot of showings. And all of a sudden, because the rate dropped,
Mm-hmm.
this was in the Corona area. So I definitely
Hmm.
see increase in demand, and what that will mean is um, the prices are not going to drop. I'm not going to say they're going to increase, but I know the prices are not going to drop overall. Of course, Florida, I know, is taking a hit right now. Tennessee is taking a hit right now. um, there's a town called Celebration in Florida. uh, Properties are down there. And one of the reasons in Florida is because obviously of the interest rates, the HOA dues. But in towns like Celebration, which is 20, 30 minutes away from Orlando Disneyland, I believe, Disney World, there's a lot of vacant Airbnbs, and the slowdown in Airbnbs having a direct impact on that town.
That's
So
true.
there's a lot of pockets like this. Palm Springs over here in Southern California, 2 hours from where I'm at, um, their prices, medium home price, have dropped almost 21% because the Airbnb market has drastic restrictions all of a sudden from the city. So there's a flood of Airbnbs for sale. There's a flood of
Mm,
vacant properties for sale. A lot of people who are buying for investment and Airbnbs are not buying anymore. So the prices have dropped. So there's a lot of external factors. So maybe the price may not go up in those cities, but overall, home prices are going up. Anaheim Hills, we're seeing an uptick in prices still. So there's no drop. So there's a direct correlation between the interest rate drop, and the purchase of homes and all that. So we can see that. And I wanted to bring that up. What have you seen as far as home demand goes based on talking to other? And I know you mentioned you also do loans in Texas and other states. You want to talk about some of those areas that you may know what's happening so they understand?
totally. And I want to bring up something that kind of goes with what you were saying. So 2008, everyone heard of it. Financial crisis. The prices, if you were a homeowner then and you kept your house value went down for
Correct.
mostly everyone. But in about it's about 4 to 5 years after that when values stabilized and when they went back to what they were,
Hmm.
and then you're back to appreciation. So
Right.
if real estate is, I say that because real estate is always going to appreciate, and uh, it's most always going to appreciate to the people
Right.
that because there's a lot of inventory in Palm Springs or in other states where Airbnb is taking a real effect and toll on things. Prices it's real estate. It's history. It's proven. It's fact that real estate will appreciate. It'll take maybe some time, but it will go back to where it was. And
Right.
so if you're thinking about buying around those areas, hey, now's the time to do it, because when it's not hot, it's not that hot topic of Airbnb, then you're gonna wish you would have bought then
Right.
at those prices.
Right. Yeah.
So that to say, um, it's well, just as you pointed out, in different states, there's different things happening, and it depends on the locality, specifically. And in right now, what I'm seeing in the state of North Carolina, South Carolina, there is specifically North Carolina. North Carolina has such a high demand right now. It's I've spoken to different people, agents, lenders, different people, and their opinion is that North Carolina is the number one state that has, or the state that has the most demand for real estate right now. Whether
Hmm.
it's people buying, uh, people selling, it's really hot right now. So North
Right.
Carolina, number one state right now for real estate, and of course, if there's demand, then the prices are going to get inflated, and that is what's happening. I talked to clients in there, and they're like, "Hey, these houses are going quicker
Right.
each month, and
Right.
um, there's more and more people coming. There's people from places like Washington or California buying these houses cash, and that's what I'm seeing. North Carolina to be the number one place for real estate at the moment. Before, if you would ask me, or if you would ask other people, last year or even a few months ago, Texas would have been the number one state.
Hmm.
Yeah, Texas was a place to be, especially during COVID. Lots of people went over there, and yeah, so that's what I'm seeing
Okay.
as far as
Cool.
demand.
Yeah. So one of the things I was thinking about when you were talking, and the reason I mentioned why there's a price drop in certain cities like Palm Springs, Joshua Tree, Celebration, Pigeon Pass, Big Bear, all those are tourist countries, or tourist areas, a lot of Airbnbs. So
Yeah,
there's a big impact. So if I'm a buyer, I may say, well, why is that important to me? Well, here's the thing: why is it important? Two things. There's two steps in buying process. Of course, if you're at the liberty of moving anywhere, if I'm staying in California or I'm in Orange County, and if my job allows me, or if my family allows me, or whatever, and if I'm looking for a house, there's two things happening right now. Number one, prices are very high. Let's say I'm in Orange County, very high prices. Medium home price in Orange County is 1.2, and I'm qualified up to 900 as an example. So number one, I'm going to get a lower tier home. I'm getting the lower home under the medium price, right? I have two options right now because the rates drop. One option is I can buy something for 800, 900, can't afford a 1.2 average medium home price. I'm going to get under par home. I can do that. Other option is, hey, I can work remotely or I can find another job. I'm a nurse, I'm a doctor, I'm an accountant. I can move to Florida, I can move to Palm Springs. Whatever I'm doing, I can find a job there. So the rates drop. I can go to Palm Springs and I can buy a $600,000 house, which is the same house that I'm going to buy in Orange County. That's going to cost me 1.2. So that's an advantage. Number one, I'm moving to an area where the home prices are lower. So that's an advantage. The second advantage is that, hey, the prices dropped 20%. Joshua Tree prices are down, not the price, but the medium home price is down. I'm not saying the prices drop, but if you look at the medium home price, that is down 27% from 6 months ago. Celebration is down 20%. Pigeon Forge in Tennessee is down 20%. So maybe I should go buy there. I can work remote or I can find a job in Florida. Hey, I work for Disneyland here anyways in Anaheim. I should move to Celebration because it's a lot cheaper than Orange County. Prices are down 20%. I'm going to take advantage. So price drops could be an advantage to somebody who could do that, right? I mean, why not? And if I'm a seller in Orange County, I maybe I should sell and move to, Palm Springs or any other areas where prices are dropped. So there is a significant advantage, not only just because the prices are dropping, but there is a lull in some markets, and so you may want to find out. Talk to your local realtor, talk to your local lender. You always welcome to shoot me an email or make a comment, whether you live or not, and I can refer you to lenders. I can refer you to Jorge, and he can refer you to other lenders that he knows, and find out what's happening in your area, what's a good place to move, so I can take advantage of the lower prices where they've dropped. Some prices still going up, and how I can take advantage of the current rate, even if it's 6%, and even if it's going to go down to 5.75%. Buy now because I qualify. I have a job.
It's true. That's all true. Very well said.
Yeah. So, have you seen any spots where the prices have dropped or gone up where they may not want to go or want to go based on talking to other people?
So Bakersfield, from what I've seen, Bakersfield has it's been steadily appreciating, but for some reason there's been a drop in prices of homes there, which I'm still getting data from clients
Right.
that are there. But Bakersfield, for some reason, at the moment, and like I mentioned, North Carolina just going up. South Carolina as well, the prices of houses, because there's a lot of demand. Texas in general, the demand has come down than before. Also, a lot of one of the things that people don't realize when they get interested about buying a house in Texas is that property taxes in Texas are pretty high. So as the county assessor catches up with the valuation of the houses in Texas, those property taxes the next year and the following year are going to go up. And this past year, people whose houses were assessed and they got the new property tax bill, they were pretty surprised. Is what I've spoken to with different clients and what I've heard from different people. And
Mm-hmm.
it's such a it's such a surprise to people that I've seen reports and news articles that people have actually been selling in Texas because they didn't expect, or they were caught off guard because of that.
Right.
It's a it's a really good high number over there in Texas. So it for someone who has a fixed income, or for somebody who doesn't get a raise each year, a
Mm-hmm.
significant raise, it's a significant number each
Yeah.
year to pay that.
Yeah,
So
absolutely. You're absolutely right. In fact, that's what's happening with Florida. Florida, there's 5 or 6 or 7 metro areas, Broward County, for example, Miami, Fort Lauderdale. As you know, several things happen. One, because of the disasters,
mm.
the building that dropped over down.
Oh
There's a lot of new regulations from the city and the counties, and all of a sudden, in the last year, 2 years, their insurance rates
yeah. Oof.
have done not only gone double, they've tripled and quadrupled. On top of that, the HOA have increased their rates from $300 to $1,000. And a lot of these people who stay there, majority of them, from what I'm hearing, are seniors, been there for 20 years. They're on fixed income. They're barely making through. They bought the condo for $200,000, $300,000. They could afford it. Now the HOA is high, almost $300, $400 a month more. Their property taxes went up more. Certain areas like Texas that you mentioned, the insurance went sky high, and then
Yeah.
everything else went up: gas prices, food prices.
Hmm.
And a lot of these ladies, one lady I saw on the news, she said, "I'm just going to walk on the house after 20, 30 years." And she talked to a realtor, and the realtor is saying, "No, don't walk. Stay in the house. Don't pay the mortgage. You bought this for $200,000. It's worth $800,000. So even
Mm.
if you don't pay for a year, you have equity if you have to sell." So then she decided to stay based on the realtor's advice. She said, "I can't
Mm.
afford it." But that's fine. Don't pay. I mean, what can you do? But the difference is, in 2008, I don't know if you're in the business or not. I was in the business, and if you could not pay, you had zero equity. So the house foreclosed on. But right now, even if you say at lower price, let's say she bought the house for $200,000. At peak time, the house was worth $800,000.
Mm.
Now she sells at 550 or 600 because of distress sale.
Mm.
Take home the $300,000 that you have equity. And
Exactly.
sure, the realtor convinced the seller not stay there. So
That's
that's
great
what's
advice.
happening, and so as going back to the property tax that you mentioned, yes, those factors affect a lot, especially the seniors and boomers who are on fixed income. The newer buyers that can adjust a job or get a second income or go Uber driving or get a weekend job, they can come up with extra $400 a month if they had to. A lot of the
Mm.
seniors who have health issues or cannot work or fixed income, they can't do that. And that's one area that I know uh, this is happening because they can't afford to pay the extra.
Yeah.
And so let's see how it pans out. Let's see other areas. And right now, the nation has a lot of spotty areas. There are a lot of spotty areas where prices
Yes.
are going up. And there's a lot of spotty areas where the prices are coming down. A lot of vacant homes, um, rents are stabilizing. So there's a lot of things happening, and it's hard
Mm.
to keep up with it because all of a sudden things are changing drastically. And
Yep.
that's why it's important to talk to a local realtor, local lender, and we'll be glad to connect you. So put on the comments or contact me, and we'll refer you out to a expert agent who knows. And I have a huge database of nationwide top realtors. Be glad to help you out on that. So keep that in mind. It's to your benefit. Like the agent that I told you, convince the seller not to move. So you need
Mm.
agents like those. So let's move. Do you have anything else you want to discuss on this topic before we move on, Jorge? Or
I think it's really good that you're mentioning these things, because these things are not popular to mention. It's popular to see on YouTube videos or just random videos, just things that are going to sell, things that are going to sound pretty, but these are the facts, and this is something that affects people
Mhm.
daily, and that will affect people, if not now,
Right,
later on in the future. So this is
right.
something really important to mention to people as they get maybe prepared to buy a house for the first time, or if they're already in a house, a repeat buyer. It's something really important. So I'm glad that you're bringing these things up.
Right, right. Okay. So here's something I want to discuss quickly, going switching gears here. This chart just shows you the impact of the rates. It just shows, and maybe I'll let you talk on this. What do you see here? Basically, the higher the rates, the lower the payments, or higher the pace, the higher. So, and we have a chart on this. This is for $250,000. I have a chart for 400 and 600. So what do you see on this? What would you tell any buyer or seller looking at this chart?
Well, as you can see, it probably someone who sees 7.5 interest rate is going to be like, "Hey, that's pretty high. I'm not interested." But when you, as you're seeing the numbers there, when you compare 7.5 to 5.5, the monthly mortgage principal and interest, it's not that much of a difference. You
Hmm.
can certainly, uh, I think you can justify the the interest rate difference in comparison to the monthly mortgage principal and interest.
Okay.
It's it's not that big of a difference.
Okay.
When you're comparing things to, hey, I love that house. That house is next to the school that I want my kids to go to. Or I
Hmm.
love that house because I'm a first time home buyer. I'm single, and that's a house I can afford. I love it. Is it gonna be bought? Is someone else gonna buy it?
Hmm.
Um, it's my opportunity to get into first time as a home buyer.
Right.
That house next to the school or next to somewhere next to work. You got to compare those things. And again, you can refinance to a lower rate.
Right.
So it's those numbers are is that much difference going to keep you from living in the house that you want to buy as a first time home buyer that you can't buy, or next to the
Right.
workplace or school that
Yeah.
you want your kids to go to, or you want to go?
Right.
um, and keep in mind that real estate appreciates, so
Right.
prices are
Okay.
just gonna
Cool.
go up.
Yeah. So that is at a $250,000 loan amount, and assuming you put some down, so the house price may be higher. Let's go to one more step up, and let me see. Add to stage. So this is the same example, but it's a $450,000 house. Tell me what you feel about this chart now.
I do see the difference in there. I feel the difference is higher, in monthly mortgage principal and interest, as you
Hmm.
can see. Um, yeah, as we go up in home loan amounts, you will see that monthly mortgage principal and interest
Right.
number get bigger and bigger. So yes, yeah, that makes a difference to me for sure.
Yeah. So when the prices go up or the loan amount goes up, assuming you put down, maybe you put 100,000 down and your loan amount is 450, then there's a significant difference. If you look at the last green box there at 5.5%, your mortgage, and this is only principal and interest, does not include your tax and insurance. It's 2555, and at 7.5%, it doesn't show, but the difference is $591. And that's savings. That means if you buy a home at 450 at 5.5% versus 7.5, you'll save 600 bucks a month. That's a big chunk. That's a difference between if I can buy or not, because that's a more than a car payment, or at least it's a car payment,
Yeah.
right? And knocking out a car payment on your mortgage, your qualification just got higher. So let's look at one more chart and compare how much the price difference makes. And I'm assuming, let me see. So this one is 650. So I'll let you mention on this chart and go from there.
650. Let's see. 650, same numbers. Same thing as the loan amount increases, you're gonna see the
Now it's
the
difficult,
difference
right?
in
I
there.
mean, now it's $800 difference. That's going to throw somebody off. Even if it was 6.5%, there's a $400 difference. That's a big chunk.
Yes, it is.
And
Yes,
I'm
it is.
wondering what that would be at $1 million. I didn't put $1 million yet. I'm in Orange County. I should have put one up there for $1 million. I'm sure that's almost $1,200 of difference on a monthly payment.
Hmm.
That's a big, big, big chunk. So
It is. It
yeah,
is.
yeah, huge, huge chunk. So
Good
uh,
data. Good
yeah,
thing to show people.
right, right. So I'm going to take this chart out here, remove this. Let me see. Okay. So now let's switch some gears. And we talked about um, the interest rate, where they're going to go. One thing I wanted to talk about, or wanted to talk in general and see, is the rate change effect going to be more for the buyers or is it going to be more for the sellers?
Ooh, that's a good question. Well, as you were talking earlier, that maybe a seller is also a buyer.
Right.
So who is it going to affect more? It just depends, because if you're a seller and you don't have a house to live in, then you most likely will buy again. So if if the if you're a seller and the rates come down, you're gonna have more demand for your house, more interest, more attention to your house. So more people want to buy your house, and maybe the um, maybe you sell the house for more because you have more
Mhm.
people wanting to buy your house. Let's say you sell it and you're like, cool, sold my house, I'm happy. With that scenario in mind, that rates came down a little bit,
Mhm.
it's going to be this most likely the same situation for you when you go want to buy a house. There's going to be people maybe having bidding wars for that house that you want to buy. So who is it going to affect more? Ah, gosh, I would say it's going to affect both people the same, because
Mhm.
if that thing happens, then the other thing happens.
Right. Right.
I would say it's for
Absolutely.
both.
Yeah, here's another thing that's, and the reason I asked this question, or kind of thinking out loud for our viewers' sake, here's what has been happening. One, why is there a shortage? The shortage is there because a lot of the homeowners that bought 5 years ago have about anywhere between 3 to 5 years, have a very
Yes.
low mortgage. I've sold homes at 2.5% interest rate fixed. They're not going anywhere, right? And then there's a lot of people who refinance. What's the statistic that 80% of all the homeowners who had loans refinanced and their rates are under 5% or 4%? That's huge. So if I'm a seller, luckily I refinance mine and I have 3% interest rate. I'm not going anywhere, because here's a typical seller thinking, and I could be wrong, but I'm thinking that myself. I have 3% interest rate. I bought my house 10, 15 years ago, right? I may want a bigger home or a nicer home or gated community, or I want a view home. And I do want that
Hmm.
as a typical seller. But here's my dilemma. One, any house I buy today, the kind of house I have today, 2,500 square feet house, and I'm in Orange County, so I'll talk about an Orange County price. If I buy today a 2,500 square feet home, newer home, let's say I go to Irvine, Laguna Beach, nicer areas, Newport, they start at 1.5, 1.6, right?
Hmm.
So right there, my payment's going to go higher because the prices are so high. Dilemma number one, I don't want to pay 1.5. Hell no, Dilemma number two, I have 3% interest rate right now. And I'm talking about typical seller. I'm not talking about me. I'm talking about typical seller. I have
Hmm.
3%. I bought my house for 500. Yes, I can get $1 million for my house, but I have to pay 1.6, 1.7 for the house I want. But I have to pay 6%. No way I'm going to do that. So that's a second dilemma. The third dilemma is right now, insurance rates, most sellers in California, their rates have significantly gone up. So if I was paying 2,000 a year for my insurance, it could be 4,000 to 6,000 when I get my renewal check, a renewal bill, and I'm scared about it. And
Yes.
when I say me, a typical seller, because that's what's happening. Insurance rate in states like Florida and California have gone sky high. Florida had the rain and the disasters. We have fire disasters, other dangers, wind, and all that. So it has gone up. But the other thing is the property tax. I'm paying property tax on a $500,000 house, maybe on a $600,000 value. But if I buy a 1.7 house, my property tax just triples. So these factors may keep me from not selling, and it is keeping them from not selling. And that's what's keeping the prices high, because a lot of the sellers like me that I just mentioned are in the same boat. They don't want to move. They don't want to
Mm.
double or triple their payments.
Mm.
And that's where the dilemma is. So I get questions from my buyers all the time. when prices are gonna drop? No, that's not what they ask. When are they gonna crash? And I tell them, number one, they're not gonna crash, and number two, they're not gonna drop significantly in a certain areas. Orange County, they're not gonna drop. So on one hand, sellers are not moving, so there's low inventory, so the prices are staying. On the other hand, buyers have been waiting and waiting for the prices to drop, and they're not dropping. The good thing is the rates drop. So we have this conflict going on, and we're at a standstill. The question is, how long is it going to go on?
That's the $1,000,000
that's a
question.
right?
Yeah. Yeah, no, perfectly said. Wait, everything you said, everything ties to each other. It's not just one thing. It's
not just the buyer and the seller. It's they're together.
yeah.
If I'm a seller, I'm a buyer. And if
Yeah.
I'm a buyer, I'm waiting for those down sellers to put their home on the market. But those down sellers not putting on the market because they don't want to double their payment or property tax or insurance. So what do we do? And to make things worse, and I'm not trying to sound negative, I'm just giving you facts. I don't want to be negative. But here's another dilemma. There's a big demand of homes. I don't know what the demand is, 4 or 5 million homes demand, and we have less homes for sale. The other dilemma is that the builders cannot keep up with the demand.
Yeah.
That's another thing that's happening. How fast can they build? Today, if I buy land and if I go to the city and get the zoning and the approvals, it's a slow process. So the builders cannot keep up with it. So this scenario that we're in may be around for another year, 2 years. Who knows? Maybe 3 years.
Well, especially here in California.
Yeah.
Especially here in California, the process for builders to build, it's such a delayed process.
Exactly.
Such a delayed process. It's
Right.
I know lots of builders don't even want to build here because it's such a delayed process here in California specifically. So yeah.
And I know that California, especially California, and not about other states, they have passed a law or regulation where if you have a commercial property or a warehouse zone property or industrial zone property, they're going to be lax and giving you residential zoning on it, which is great. That's good news. There's other thing about ADU, accessory dwelling unit. So if I have a yard in my back, I can put up a ADU and rent it out. So there are things happening that helps the housing market, but that's just a drop in the bucket. That's not really going to help. I mean, how many people are going to build ADUs and rent them out, and how much is that going to help the housing market? Not really that much.
Yeah, it's true.
So we're pretty much at a standstill, and unless something changes significantly, which we have been waiting, and buyers and sellers have been waiting for the prices to go down, inventory to go up, rates to come down, nothing is happening. And housing market is the way I see it's at full steam. I mean, I was talking to some agents this morning. They had open houses this weekend, and the 3 of the agents that I talked to, because that's all we do, because that's how we keep up with the market, all 3 of them said they have offers coming in today. 3 open houses, newer listings, they all have offers coming in first week in the market.
Where was this at?
This is one house was in Yorba Linda that I talked to. Another house was in Fontana. And the other house was, you know what? I'm not sure. He didn't say, and I didn't ask, so I don't know. But I know the one was in Fontana, which is an hour's drive from Anaheim Hills. Yorba Linda is other side of the freeway, which is 8 minutes from here. The house in Yorba Linda was listed for 1.2, built in 1965, 4 bedrooms, 2 bath. I went to see it on a broker preview on Friday night, so I've actually seen that house. Typical home, needs some work, needs paint, needs carpet. They're getting an offer. Fontana was a house that was a newer house in the $600,000 range.
And they just got that interest recently. The interest of people looking to buy those houses.
Right. Well, it just got listed last week, and they're already having an offer. So what I'm saying, there's activity, and there's not just activity, but there's people who are buying. Even at 6%, they might say they're not waiting for 5.5. These people are buying.
Well, they must understand everything ties to each other, and they must have a plan. And yeah, it's about communication. Communicating.
So I'm going to ask you a simple question. If I'm a buyer, if the market's changing, if I don't know what's happening, if I don't know how much my payments are, Who should they talk to so they're more educated about it to make their life easier?
Well, uh, you gotta talk to someone who's local.
Yeah,
What's happening in? Is there gonna be? Is there construction happening down the street? Is there a mall being built? Is there a new school being built down the street? Is there
right,
a shopping center? That is going to be something your agent will know because they're the ones who know what's happening. That's the job. That's your job.
right,
So
right.
being
Okay,
the local expert, knowing
exactly.
what's happening.
And who can they contact to get a local expert? And this is a sarcastic question, but who can they call to get a referral for a local agent?
Call Mike.
Okay,
Call Mike.
sure.
Contact your local person. Call Mike. You handle all of Orange County.
Mm-hmm.
You handle most of LA, I would say,
Right,
Inland Empire. So definitely
right.
contact you. You
Yeah, and
you
I'm just trying
know.
to be humorous, but the point is, if you need a local realtor to talk to, you don't have to call me. Call your local realtor. Go online. Go to Google. Go to Zillow, or maybe you
Mhm.
know somebody. Whatever you do, get educated. Talk to realtors. Just because you call a realtor doesn't mean you have to buy or sell from him or her. They're here to help you. They're here to answer questions for you. They're here to guide you. That's how they do business. So don't be scared to talk to a realtor. Say, hey, come for coffee. Explain to me what the heck's going on, what's going to happen, and get educated. That's what I say. Just realtors are not bad people. They're here to help you. You don't have to buy from them, even if you talk to them for an hour. That's what I'm saying. Get educated, get this information.
I want to add to that. So I said you because one of the reasons why I got in this live stream is because you are not like other agents who just, hey, call me when you're ready to buy, or maybe they tell you some facts about this and that. But what is your agent going to add value? How is your agent going to educate you? What value do they bring to you? Buying a house in California, especially, or anywhere in the US, it's going to cost you what, maybe $20,000 at least to buy a house. More likely, it's going to cost you hundreds of thousands of dollars.
Right.
So if you're going to buy something that's worth hundreds of thousands of dollars, personally, I want to know every single detail. Like, why should I buy here? What's going to happen here? Tell me how does this thing work? All that to say that get with somebody who knows the facts, who shows you things, who shows you charts that you were
Hmm.
showing today. Is going to talk to you about this. Is going to let you know how things work, and not just vague things. Not like, oh well, hey, something that you can easily find on Google. You can do that yourself,
Right.
but someone who knows in depth what they're talking about and can guide you and has the patience to
Hmm.
guide you. So definitely talk to someone who you're comfortable with, who knows the facts, and is pretty much an expert, because buying a house
Right.
is a big expense.
Big
So
expense. Right.
you want someone who
Yes,
knows exactly what it is.
exactly. You absolutely. And like I said, even if you're not ready to buy, you want to buy a year from now, or you want to sell a year from now, absolutely call a realtor in your neighborhood. Call us. We'll refer you. But here's another reason you want to talk to somebody, maybe talk to three of them, and then pick one when you are ready to buy or sell. Here's another reason. Now, as you know, as of August 24th, 2024, the National Association of Realtors got sued and they settled on a lawsuit where now me as a buyer's agent, if you call me up, Jorge, if you're a buyer, Jorge, and say, hey, Mike, I saw you online. I want to buy a house. I'm going to tell you, hey, Jorge, come to my office or let's meet at a Starbucks. I want to explain to you the new regulations. You have to sign a buyer broker agreement, or I cannot take you in a house. You, as a buyer, have to sign how much commission you are going to pay the buyer's agent. Although, as your agent, I'm going to 90% chance I'm going to have the seller pay for it. So you need to know all this because now it has to be in writing. You cannot work with all buyers agents out there. You're going to pick one,
Mhm.
whether it's for one day or for 1 week or 90 days, and work with that realtor as a buyer. And if you're going to sell your house, you have to sign a listing agreement where that listing agent is your exclusive agent to sell your house. So the what am I going to say? The way we do business has changed as of August 24th, and it's changing as we go along because there's more regulations coming. So as much as realtors and lenders have a bad reputation, they're cheesy, they're just out there for commissions. I don't want to call them because they'll send me emails and bug me. They're not going to do that. Good agents, professional agents, experienced agents, agents who are referred, who's been around for 5, 10, 15, 20 years are not going to do that. So get that off your mind. I was going to say chest, but I'm going to say mind. They're good people, and we're here to help you.
Yeah.
Uh, this is the time to talk to your realtor. Treat him as a professional when you talk to them. Maybe you can say bad things about them behind their back, but when we are talking face to face, we are here to help you. Period. You don't have to buy it through us, but get educated, get to know the trends in your local neighborhood because things are changing, and it's not the same anymore. Buying a home or selling a home as of August 2024 is a whole new ballgame.
Hmm. Totally.
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 Yeah.
Totally. I agree.
And you throw in the interest rate cuts and the interest rate ups and the property tax ups and downs, insurance just got very, very complicated.
Yes. Yes, indeed. And then add ADUs or Airbnb if that's happening where you want to buy or thinking of buying or
Mhm.
selling, because it'll affect the selling as well.
Right, right. Yeah.
Yes.
Okay. So as we end towards this live show, I wanted to go for at least an hour so we can give them value. Jorge, I wanted to talk about strategies for securing a lower rates.
Mm.
And I don't mean wait for 5.5. What can I, as a buyer or a seller that's a buyer, can do when it comes to credit or this and that, so that I can get a better rate than what I would have gotten 6 months ago, or the other guy's getting? What can they do to get a better rate? So even if my mortgage payment drops by $100 or $300 or $500, depending on where you are, it makes a big difference in my pocket. What can they do?
Well, honestly, it's the main factor is going to be the FICO score. That's going to be the main factor, really. And it's easy for me to say, hey, pay down your debt to better your FICO score, because it's connected. When you lower your debt, your FICO score will most likely increase. Um, s- that's the answer. A FICO score is the main factor when it comes to interest rates, to
Mhm.
what you're going to get as an interest rate. And when you lower your debt, which is tied to what's called debt to income ratio, when you lower your debt, it reflects um, on your credit score. So the lower that you lower that debt, the better credit score that you're going to get, and
Right.
which will affect it. Interest rates for loans, they go in buckets. Typically they go in buckets of 20% increments. So each time that you increase or decrease your credit score, for banks, Chase, Wells Fargo, Bank of America, whatever bank, whatever
Mhm.
lender for real estate, that'll reflect on what interest rate you get. Each typically it's like 20 points increments. Sometimes
Okay.
it's 30, but it's typically 20. So FICO score is really the main factor about getting a higher or lower interest rate.
Okay. Okay. Cool. Yeah, that really helps. So basically, drop your debt. So if you have a credit card, paid it off or pay them more. Drop your. Maybe I cannot pay off. Let's say I have a $15,000 credit card balance, and there's no way I can pay it off because hey, I'm struggling as it is, and I'm trying to buy a house, can barely buy bread.
Yeah,
But even if I drop that 15,000 to 7,000 or
yeah.
5,000, or I have a car and I got a one more year payment, $350. Maybe I want to pay that off. So that 350 gets out of my debt ratio. So is that the kind of things you're talking about, or?
Yes, exactly, exactly. The actual algorithm of how FICO scores or credit scores work, it's not a public thing, and it's actually a little bit frustrating, because when I mentioned a little bit a while ago that when you lower your debt, your credit score will most likely increase. I said most likely because actually I've seen it happen to clients of mine that and you've probably seen it happen. Whoever's watching this, they probably seen it happen too. When they pay down debt, maybe their credit score actually goes down.
Hmm.
So it's part of the algorithm, which is not a public thing for people to
Okay.
see.
Mhm.
And actually that the algorithm changes, and the algorithms that are used for credit scores for houses, they it, there's new ones being implemented. So all of that to say that, yes, it's safe to say that when you pay down debt, even if it's just a little bit, it will
Okay.
help towards increasing your credit
Right.
score.
Right. Okay. What else? A couple of things they can do. Let's say I'm really, really tight. I'm one of those buyers that are really tight. There's no way I can pay extra car payment or extra credit card bill. What else can I do? Let's say my FICO score is 620 and I want to make it better. And I know 640 is a magic word or a magic, I think 640 is a good, right? What
Credit
else
score
can I
wise,
do other than paying down my debt? Can I do that might help?
well, what I always tell people is that when they want to increase their credit score, go to a local bank, go to a local credit union, go somewhere where they offer what's called a secured credit card.
Mm-hmm.
And a secured credit card is basically, it's really a debit card, but it's a secured credit card. That's what it's called. So the way
Okay.
that it works is that you go to Chase, ask them for a secured credit card. They gave it to you. And how it works is that you put, let's say, $1, maybe you put $100 into
Mm-hmm.
that credit card. Whether you spend $1 or $10 million with that secured credit card each month, it doesn't make a difference, but it will increase your credit score. That's a
Okay.
fact. So that's what I
Right.
tell people who want to increase their credit scores and don't
Right.
have the $50, $100 each month to pay
Right.
down something. Go get a security card. Put $1, $10 in it. Use
Okay.
it. It doesn't matter how much you spend. It will increase your credit score. So
Cool.
yeah,
Cool.
that's what I would say.
Hey, I just got a comment, Jorge, from Hector. Hey, thanks, Hector, for watching and thanks for asking the question. Hector is asking, and I'm going to read this question out. It's saying, what do you anticipate the rates dropping to over the next 5 years?
Oof. Let me get my crystal ball here. Jeez, that's a tough one. I don't wanna mislead. I don't wanna say something I don't know.
Okay.
If COVID happens, hey, we're gonna see rates again in the 1%, 2%. If something like that happens,
Right, right, right.
nobody knows what's gonna happen in the next 5 years. What to give you an answer of what I hope, what it seems, as far as what the Federal Reserve has said and has been the trend,
Mm-hmm.
and also the historical trend when we see the federal charts, actually the some of the charts that you were showing,
Mm-hmm.
the trend. So 1980, the typical rate was 11-ish%. In 1990, there was a small recession in the early 1990s. The average rate was about 10%. In 2000s,
Mm-hmm.
the average rate was, in the early 2000s, it was somewhere in the eights, high nines, around eights. So it's been coming down. It's been coming down. Obviously, people have heard that the Federal Reserve has cut rates
Mm-hmm.
recently.
Okay.
So they've said that they've expressed that they want to cut rates again more. Um, so if we see that, and if that's a trend, then I'll tell you that based on those facts, the trend, we're gonna see rates come down. How much? That's a tough one. That's a tough
Yeah.
one.
Yeah.
Um, if you're asking me, are we gonna see rates in the twos, threes, 1% like COVID? I would tell you that's not gonna happen,
Yeah. Yeah. Yeah.
unfortunately.
Yeah.
Um,
Here's another way I can answer that, if I may answer. And Hector, I'm
mhm.
assuming you're still online and feel free to ask me the question again. But Hector, if I was sitting down with you in a coffee shop and you had called me as a realtor and talked to you, you have future planning. Your question is, what do you anticipate the rates dropping to over the next 5 years? You know what? How would I would answer you, and how I'm answering it right now is that, why do you ask this question? Why
Mm.
are you thinking of 5 years? Are you going to wait till 5 years? What can we do that you can buy sooner? Or that would be my next question. Why you worry about? Why not think about 7 years or 3 years? Why 5 years? what are you really asking? That would be my question.
That's a good one.
Yeah,
Because
I'm not sure if you're still on there, but that would be my question.
because in 5 years, how much is the house going to appreciate?
Yeah. Or 5 years, what if you lose a job in the 5th year? Something happens medical and you don't have a job, or if you're both working, if you're married, or two brothers or two sisters, what if you lose a job, or there's a recession, or there's a big earthquake in California and or wherever you are and something happened, you could not buy. Who knows? So the question is, what is really your question, right? It's not what are rates in 5 years, but what is your true question? And you need to talk to somebody about that. That's what we were talking earlier, is talk to somebody strictly for information. That'll be a better answer to answer you.
I like that answer. Yeah.
Yeah.
Write down the facts.
Yeah.
What are the numbers now?
Yep.
What are the numbers going to be in 5 years?
And then why are you asking for 5 years? What are you trying to get? And you may have a legit reason. Hey, in 5 years, I'm going to get married. I have a girlfriend. We decided we're going to get married. And in 5 years, July 4th, we decided we're going to get married, blah, or have a baby. And that's why. So you may have a legit answer, but without knowing that, it's hard to answer that. And nobody's going to know. I don't care how many realtors or lenders you ask. Nobody can answer that question.
That's true.
If somebody tells you a certain amount answer, don't work with that lender or realtor. They're lying.
That's true. That's true.
I'm trying to be funny here, So it's
That's
3:00. It's my coffee or tea time. So, well, I think we'll call it a day. Jorge, thanks for joining this live stream. If you're watching, if you have any questions, or if you're watching the tape after the live, feel free to drop a comment or contact me, direct email me, direct message me, and we're here to help you answer any question with absolutely no obligation. So we're here to help you. Thanks for watching. I'm Mike Patel. Sell smart so you gain more. Know more if you're a buyer so that you can buy intelligently. Thanks, everybody. Thanks, Jorge.
Bye.
Bye. Bye. Okay.